Hi there, Kar Yong here, and welcome to another weekly trade review video. Now in this video, what I'm going to be doing is to share with you the highlights trade that we had last week. To be honest, that's not a lot of trades. I only have like one or two. One of it resulted in an outcome. The other trade is basically still running over this weekend. And the objective of me sharing with you this is to really show you behind the scene of some of the processes, some of the framework that I use to approach the market, right? And hopefully provide you some guidance or even potential reference that you can actually take and copy it over to help you in your own trading processes, right? So without further ado, let me very quickly direct you over to the screen over here that you're seeing. Okay, so this is actually the end of the month, right? So this weekend is already progressing into March, right? So kind of quick summarized version for February. The month of Feb to me is not very active. Total trades I've taken is 11. Okay, so this is actually across multiple assets, including currencies, commodities, index, as well as crypto market. Okay, so of the 11 trades, I managed to win 5 of them, which means those 5 trades took profit, hitting my targets, right? 4 of them actually resulted in the loss, so that hits our stop loss. 2 trades actually got out with break even, and the total net gain over here for the month of February is positive 6.03 R. Right, now for those of you not familiar with this concept of what is 6.03 R, R is actually what is the unit of risk. Okay, so if you put in 1% risk per trade, then 1% is equivalent to 1 R. Again, if you are putting in 2% risk per trade, then 2% to you is 1 R, right? So R here is basically a unit terms for risk. Okay, so basically you get a multiplier of 6 times whatever risk you put in for the month itself, right? Which is to me very decent. Okay, so again, I emphasize a lot in one of my principles, right, with fellow traders is don't focus on the quality. Don't focus on the quantity of trades, right? You do not need to take a lot of trades, but instead you want to focus on the quality, right? And so you can see, right, in the month of February itself, we just take 11. Okay, that's not a lot. Now, last week, one of the highlighted trades is XRP, right, which is the crypto market. So again, pulling behind the curtains to show you some of the processes I have over here. This is typically the trade plan that I have. So every trade I take, we prepare this trading plan for our community of traders as well, covering, the directional bias, the context, why we take certain trades, the higher time frame analysis, okay, to give us clarity in terms of the direction. Then we go into the setups where I utilize 2 different setups, right? Elliott wave entry technique as well as the order flow. Okay, so let me very quickly, bring this up here for those of you who are not familiar with the framework that we use to approach the market. I call it the DSC Framework, which includes this 3 component: direction, setup, and context, right? And to me, I think doesn't matter what strategy, what technique you use, these 3 elements, you need to have it in order to achieve a profitable trade consistently. So the first thing here is direction, right? Again, it's common sense that today, if you want to have a high probability winning trade, you need to determine your directional bias. Okay, and directional bias basically just means through your own way of analyzing the market. Okay, do you have a high probability where the market will move up, or is there a higher probability the market is going to go down, right? And you need to first determine your directional bias. Okay, and once you determine the directional bias, then of course you need to have a setup to get yourself into the market, right? To initiate a trade, to execute a trade, you need to have a certain set of conditions and criteria, and that to me is what we call a setup. Okay, that's a little bit of a element of time, right? When to get in, which price to get in, and when to get out, which price to get out, right? And then of course the third element over here is the context, which is basically other factors to see if there's confluences, there's an alignment in the trade that we are taking. Is the risk reward ratio making sense? Is the trade worth taking, right? So those are the element of context. Okay, so very quickly, I'll jump into the chart on XRP over here to really walk you through a little bit on why we took this trade and the application of the framework itself. Okay, so over here, of course, this is already happened, right? So if I kind of backtrack a little bit, okay, back on Monday when we were looking at this trade, this was how the chart is. Okay, and on the 4-hour time frame, to me, the directional bias is super clear. Okay, why is because we have this impulsive move to the upside. The market put in a 3-wave corrective structure. Very nice little reaction of a key Fibonacci level at 123.6 extension as well. Very clear 3-wave structure. Decent reaction and bounce off that. Okay, and basically we're expecting a little bit more upside, right? Because market tends to put in a 3-wave pattern itself. So the directional bias to me is very clear. Okay, I'll be bullish bias. I'll be interested in upside. Okay, so that's the first step of the framework, right? The application of direction. Now, once I have the direction set, then the next thing is I need to determine, do I have a valid setup to get involved in the trade, right? If there's a clear direction, there's no setup, you can't take the trade, right? You need to be disciplined. You need to know certain conditions needs to be met according to your trading strategy before you pull the trigger. Okay, so for me, what was a valid setup over here is where we start to go down to the lower time frame, right? And in terms of Elliott wave setup is pretty straightforward. That's where we take in the Fib, swing high to swing low, and then we'll be looking around that 50 and 618 Fib. Okay, and of course we also want to align it with price action. So we want to see the market actually pull back correctively, right? So the entry is somewhere around 50 and 618. The stop will be at the previous low. Okay, and of course, if I can put that in, 50% mark is here, the stop is at previous low, and then the target is actually out there, right? So let me simplify this a little bit. Okay, so that's one of the setup based on Elliott wave, right? There's also the other technique on Elliott wave itself where we use a little bit slightly different fibs, right? But in this trade particularly, I was using the 50%, right, as a reference point. Now the other technique here is order flow. Okay, and for order flow, we kind of use a little bit of a different fib. So let me just very quickly pull it in. Okay, we're kind of using the 71 fib. Of course, there are some conditions that we need to also fulfill, not only just the fib. We need to have the fair value gap. Okay, we need to identify the demand zone, etc., etc. Okay, and the entry on order flow technique, we use the 71 fib. So the risk reward ratio is slightly different as well, right? The entry price is slightly different. Okay, so for order flow, we are just targeting back at where the previous swing high is. Okay, so that risk reward ratio, sorry, it's here, right? So that risk reward ratio is about 2.4. Okay, and in terms of the Elliott wave technique, we are basically aiming for equal length of 1:1. Okay, so this is where the target is, right? So you can see it's about, sorry, I'll pull my bad. Okay, the Elliott wave target, we're using this. Okay, so let me just double check for you. Right, so you can see over here, yeah, so we're kind of using that previous swing high for our Elliott wave technique. And then for me, the order flow here, you can see that's a slightly smaller target, right? So that's the two setups, right, that we're looking at. So for me, I only managed to take one of it, right? So that's how the market play out. Okay, we kind of get a nice bounce off the 71. Okay, and the market basically hits the order flow technique targets pretty straightforward. And of course, for Elliott wave itself, kind of took a little bit of time, but you know, it kind of went through entirely and even go higher than that. Okay, and of course, the context over here is what, right? So there's some element of context as well, right? It kind of like overlap as the whole analysis took place, right? So just like I mentioned, the bullish bias, okay, and also mentioned about this thing called the 3-wave structure, right? So the 3-wave structure is basically part of my context element as well, right? Yes, we have a pattern that indicate bullish bias, but do I have sufficient upside profit potential? Okay, is there sufficient room where the market can actually hit higher? That's the element of context, right? And that's where this comes in. Okay, risk reward ratio. Okay, that's where when we look at the setup, okay, we also want to ask ourselves, is this worth taking? All right, and of course, where the setup appears is also very important, right? That's an element of context. You realize that this setup is actually occurring, and it's a valid setup near the bottom of a three-wave pattern as well, right? So that can increase profit potential, that increase the probability of potentially this trade may play out. Right? So all those are, the nuances of trading that we can't apply in. Hey, I kind of hope that this video over here, while it's a trade review, to also give you some insights into how I actually approach the market. Okay, and hopefully you kind of able to help you in your trading processes as well. Right. So that's all for me for this week over here. Overall, it has been a fantastic month for me. Of course, January was slightly better, but I think there's no complaints over for February. As long as again, we're able to enjoy some profits off the market, I think that's great. Okay, so all the best for the new week itself, and we'll see how it goes. Okay, with that, see you guys in the next one.